The Florida condo market is going into complete chaos with association payments going up each and every year and insurance premiums following suit with them. Some of these condos are becoming financially unrealistic with the amount that they're charging for their association payments. And because of this, some of these condos that home sellers are trying to sell, they're literally rotting away sitting on the market. And why? Because there is a new wave of laws that are affecting the condo market in 2025. And in this video today, I'm going to be breaking down exactly what you should be looking for, especially if you're looking for condos today, tomorrow, or in the next few months from now. My name is Kenny Branco. This is my channel, SoFlo Relocation Guide, and I'm going to be releasing a new video every week to keep you informed in the Florida real estate market. All right, so let's dive on in. Well, what is causing this condo chaos is that on June 24th, 2021, a condo in Surfside, Miami ended up actually collapsing. This condo was called the Champlain's Tower South, and it ended up killing about 98 of the residents that resided inside of the building. And ever since that collapse, Florida lawmakers swept in these new laws that have changed the condo market and flipped it basically on its head. And so what has occurred specifically is that condos that are 3 stories or higher and they're 30 years of age or more, or 3 stories or higher and 25 years of age or more close to salt water, they now need to do something called a milestone inspection and then a recertification every 10 years afterwards. Another also study that they need to do is called a SERIS, a structural integrity reserve study, to make sure that these buildings also have reserves. And so how does that affect you as the buyer or consumer in a sense? Well, the milestone inspection is an inspection that is mandated. So the condo building itself has to do this inspection to basically see how the building integrity is at. So is there any gapping, any cracking in the walls, and they need to take care of that. Also, if the roof, how is the roof's condition? Does it need a new roof because it's old, or does it need a new roof due to insurance reasons? It needs to definitely address those issues. Or if the elevator stopped functioning at all, they need to have the money to repair it or replace it with a brand new elevator. Balconies as well too. So if anyone has a balcony in their condo, they need to make sure of the integrity of the balcony, also the railings as well in the hallways, to make sure that everything is up to standards in terms of living condition. How does that affect you as the consumer? Well, if the building is not in livable conditions, the cities will actually even condemn the building and tell all the residents to move out until the building is basically in a livable condition. This has already occurred to a few condos in specifically the South Florida market. It has occurred to just a handful of them, but this is something that can occur. Another thing too is the SERIS. With these 3-story or higher condos, they also now need to carry up to 10% in reserves minimum. If they don't have the 10% in reserves, then you as the consumer will also have to bring more money to the table to purchase that condo. Another thing too is that these reserves are necessary because if something breaks in the condo in terms of like elevator or because of the roof needing to be replaced or something just occurring at all, the condo has to have these reserves to be able to take care and remedy the situation immediately. Now, how does that affect you as a consumer? Well, some condos are actually waiving the reserves. And so let me tell you exactly what are some of the hidden financial time bombs that you might hit as you're looking into the condo market. First, again, if the condo does not have reserves, you're possibly looking at needing to bring in more down payment. So if your lender said that you can purchase a condo for 10 to 20% or maybe even 5%, if that condo building itself does not have reserves, it doesn't matter if the lender initially said that you can bring in purchase the condo with 5% down. You're going to need to bring in 25% down because that condo does not have reserves, and that can change your predicament because you might not have that 25% down, so you won't even be able to purchase that condo. Another thing too is that some condos have had to cancel their insurance policy, which is called the master insurance policy, because of either new roofs or they needed to do some repairs. So with those condos that don't have a master insurance policy active, they may be a cash only building. So if you were thinking about financing, that building might not even be able to be financeable. Another thing too is that if any of the condos that you're looking at are still completing crucial items for their milestone inspection, that is another reason why you might have to bring more money to the table, because your lender may think that that condo is too much of a risk for the bank to finance. Another thing too is that some of these condos are running special assessments for years on end that they have either integrated into their association payment, or it's separate payment adjacent to their association payment for a few years on end. The great thing though is that some sellers do understand the hardship of these special assessments and are offering to pay these special assessments at closing for the buyer. So that is another hidden financial time bomb that you might not be aware of, but this is why you're watching this video, so that you are more informed as well too. And another thing too that is occurring is that condos that are 100 units or more at starting of this year, which was January 1st of 2025, these condos also had to have a website so that you're best informed and to make sure that this condo is the right fit for you or not. So what do buyers or you as the consumer need to do? Well, what I would recommend is to definitely have a seasoned agent that knows how to navigate the condo market in Florida, or an attorney to look over everything as well for you as well too. If the condo is in a healthy situation, or if it's just a plain out sloppy building that you're gonna possibly have some financial headaches if you were to purchase the condo. And that is why you might need a seasoned real estate agent or attorney to look into these items for you, because they are somewhat challenging to acquire as of right now. Hopefully in the coming months to the next couple of years, the Florida condo market will improve. Right now, Florida lawmakers are actually working on proposals to reduce some of the financial strain that these condos in Florida are dealing with. One of these proposals are actually that instead of the condos maintaining large cash reserves, that they're actually able to use lines of credit to help with the maintenance of the buildings. Hopefully with this proposal, it will help make condos a little bit more affordable again and reduce some of the association monthly due payments that these homeowners are having to currently pay on a monthly basis. I'm actually going to be keeping a close eye on these, so don't forget to subscribe down below. And if you have any questions about relocating to South Florida, please reach out to me at soflorelocationguide@gmail.com, and I'll catch you at the next video, and have a great day.